January 5th, 2024, micro NASDAQ futures, 1 minute chart, cover some poor structure and some gaps, waves, and my trades. So these two red lines, kind of pinkish red lines, these are actually come from yesterday. Scroll back over to that area during the daytime session, show you where those are. So I've got one of the red lines connected to the bottom of this candle, second red line connected to the top of this candle. And what this is defining for me is this is an area of poor structure. In order for a price zone to no longer be considered poor structure, it should have 4 overlapping candles filling that price zone. So filling that range of price, you need to have 4 overlapping candles. So this area becomes a target to be retraced later on. Let's go back to the overnight session. You can see in the overnight session that it's pretty much a sell-off pretty much all night from here all the way down into news data release this morning. We'll zoom into that. So here at 6:30 Mountain Time, 8:30 Eastern Standard Time, this data release in 2 minutes. Price moved 100 points, creating poor structure. Poor structure got retraced in the pre-market, and the interesting point about this retracement to this poor structure, instead of price just going straight back up and creating poor structure itself, no, price goes up and makes successive waves. So up, poor structure, pulls back, basically fills in that poor structure. As it came down, it created poor structure, price goes back up, retracing this poor structure. So now all of this poor structure is invalidated, price consolidates, pulls back, goes up. Yeah. And as it goes up, I've got 4 points, almost 4 touch points right here. They do align with this high. So even this area has essentially been retraced. You get a pullback of all the way down to kind of what was resistance now becomes support. Price goes up, and you get a gap here. You get a wick down. That gap is filled. Get a secondary touch right here on this candle of that gap. You can see I took a short in here, and like the first one was a loser, shorted it again, scalped it for just a few points. So why not go for more points? Well, simply because all of this structure that's being created has a lot of consolidation every time price moves up. So at this point, I'm not thinking that price is going to drop significantly. And I think I tried some more shorts and then ultimately got long, but we'll cover more of that later. So here's the first 1 minute candle. There's a gap right here. Let me zoom in on this so you can see this even better. You can barely see that blue wedge back there and blue wedge right here. Those are gaps between this candle and this candle. Whoops. Gap between this candle and this candle, the bodies. Those gaps get refilled right here with this wick. So essentially, we're now connecting essentially 4 candles. 1, 2, 3. We got like 4 touch points right here. And so that's all been invalidated now, and price starts going up. This wave 1, I'm going to move this over. We don't know that this is the low of the day or a high until the first wave occurs. So wave 1, price goes up. How do we know that this is the top? Well, I just find the smallest body candle at the top of a wave and the highest. So yeah, this doji is the smallest. This one is smaller, but this is the highest body. So that's all I measure is bodies. I don't measure wicks or tails unless it's a wave 5 candle. How do we know prices stop going up? Because you get candle body, under candle body. So wave 1 is now finished here. It's pulling back. price starts going up. So now we know that this is beginning of wave 2, and we need to see price going. I'm going to scroll a little bit to the right. You need to see price closing above this wave 1. So here's a close above wave 1, but we need to see candle body over wave 1. This one right here, this is candle body over wave 1. This candle body is, the body itself is completely above this candle body right here. You can actually faintly see it. There's a gap between these two. So between the top of this candle body and the bottom of this candle body, there's a slight gap. This candle, and to prove that, that candle opens at 485.5 and closes lower. This candle opens at 486.5, so it's 1 point higher, and closes at 490.5. So this is wave 2. How do we know this is the end of wave 2? Because price pulls back, you get candle body under all these candle bodies. So now this is confirming the price is no longer going up. We get to pull back to wave 3. At this point in time, we also have at this 1 minute away from the economic data releases at 8 a.m. Mountain Standard Time, 10 a.m. Eastern Standard Time. We have some, this ISM Services PMI is a high volatility event. So any of these bars that are high or red are high volatility, orange is medium volatility, and then yellow would be low volatility. That column is the impact. I don't pay attention to the numbers at all. The website for this economic calendar is fxstreet.com. It's the economic calendar. So at this point, every time price pulls back, it bounces, and we're creating, successive higher lows. So on this candle, well, back to this, I take some shorts in here, get stopped out, go long on this candle, 2 contracts, sell them here, add 1 on this candle. When this candle on this news release, I add 2 contracts at an average price of 92, so up near the top of this. And you can also see at this precise price, the candle body is over wave 2. So in order, we need to see candle body closing, which it does, above wave 2, and then we need to see candle body, the full candle body above wave 2 to be a wave 3. We don't know how high it's going to go. However, if you get a close above 60, which we got a close above 60 this morning here, and if the Nasdaq's not already up about 2.5%, typically I frequently see that price will go from 60 all the way to 20. And here you can see that price actually did go through 20. It closed up here at around 30. If price closes above 20, you'll typically tag 40, which it did. And so you can see where I closed. I added 1 more at 13, and I took 3 contracts off at an average of 16,523, and a final contract off at 16,540.25. I'll show you those trades later. And you can see these red lines. You can see that was that zone from the previous day of poor structure, and now it gets completely filled by, to an extent, this candle, this is partially in that candle, this is partially in this. So this is a complete retracement of that price zone with poor structure. Of significant interest also was this candle right here. You can see on my volume indicator that it's a blue cyan candle, and this is just a threshold I have set. I think it's anything over 6,000 contracts turns a certain color. Anything over 10,000 contracts turns a different color. Everything below 6,000 is just this gray color. So this is a point of interest, and it's like, what goes through my mind is, okay, is this where a bunch of shorts are occurred, or is this where a bunch of long positions were established? We don't know. Time has to progress, but getting more and more confirmation because price just doesn't come back down to this level at all for 20 minutes and then starts going up. So that's also confirmation of continued bullishness based upon everything we've talked about in this video. Here you get another extreme candle color, and there's a lot of volume. Probably because there's a lot of if you're short up here, well then your probably stop is right around in this area. If you're a momentum trader, then obviously you're getting into the position when price is breaking the previous wave high. So that's also what's happening here. And then you have a lot of computers that are also contributing to this volume as well. Probably 80-95% of this volume is probably most likely algorithmic trading. And then you can see, yeah, wave 3 pulls back wave 4, and then price continues to go up. Another thing to notice is that on the options, you can see at the 16,550 on the calls side that from the overnights from yesterday, there were 237 contracts carried overnight, and volume had been progressively building at this strike. So this also is a good indication that price can actually go there as well. You can't look at volume and say, oh, this is where price is going. Why? Because there's a tremendous amount of volume at 16,400 that all occurred pre-market, and you can see the overnight open interest was 660. So price dropped down to 16, I don't know, 380, something like that. And so that's where most of these positions were. People took their profits were taken, or people took or stop losses were hit, and positions were closed. So, adding in, the structure that we showed in the chart during the pre-market, this structure getting a lot of consolidation as it retraced this poor structure leads to the bullishness, and then just a successive higher lows, and then finally this breakout over wave 2 was also good confirmation that price is going higher this morning. That's my video. Thanks for watching. Oh yeah, you wanted to, said I would show my trades. So here you can see my ads of the final 5 contracts. Bought at 74, bought at 87, bought at 97, bought at 513. Typically when I get into a position, I'm getting in on a market order. If price goes in my direction, then I'm just simply letting my targets get hit and orders get filled. So you can see I sold at 20, 29, and 40. That's my video. Thanks for watching. Have a great day.